All right, welcome to The Explainer. Today, we are diving deep into a name that every American investor is watching, the Chinese tech giant Alibaba. And let me tell you, it's a wild story, one of massive ambition running headfirst into some pretty intense global pressure.
So what's really going on here? At its core, Alibaba is making a huge pivot. A massive, high-stakes bet. They're basically being forced, by all these U.S. tech restrictions, to completely reinvent themselves, from a company that used foreign tech to one that's building its own, a totally self-sufficient, homegrown AI powerhouse.
Okay, so here's how we're going to break it all down. First, we'll look at that big AI pivot, the bull case. Then, we'll flip the coin and talk about the major headwinds, the bear case. After that, we'll crunch the numbers on the stock itself, and finally, we'll wrap it up with the big takeaway for you, the investor. All right, let's jump right into the good stuff, the bull case. The whole argument for being optimistic about Alibaba really comes down to one thing. Its super aggressive, and you could say totally necessary, push into building its own tech.
And the centerpiece of this whole plan? It's a chip called the Xuantai C930. Now, this isn't just any processor. It's built on something called the RISC-V architecture. Why does that matter? Well, it's open source. That's the key. It means no single company or country owns it. This is Alibaba's way of trying to build a path around U.S. sanctions and get out from under the thumb of giants like NVIDIA.
But here's the really smart part. It's not just about the chip. See, Alibaba isn't just building a piece of hardware. They're trying to build a whole ecosystem. And making it compatible with NVIDIA software, that's a genius move. It makes it super easy for developers to jump on board, which could seriously speed up China's goal of becoming totally self-sufficient in tech.
And you know they're serious because look at the money they're throwing at this. We're talking over $53 billion. That's what they plan to pour into AI and their cloud business over the next 3 years alone. This is not some side project, folks. This is an all-in, bet the company kind of move.
So is all that spending paying off? You bet it is. The results are already coming in, and they are, frankly, explosive. Think about this. For 8 straight quarters, we're talking 2 full years, sales of their AI products in the cloud division have seen triple-digit growth. That's just incredible.
And it's not just about what they're building themselves. They're also making some really interesting friends. There's talk of a potential partnership with Apple, of all companies, to power AI features for iPhones in China. Can you imagine? That would be a massive game changer. It would give their tech instant credibility and unlock a gigantic new market. Okay, but it's not all sunshine and rainbows. Not even close. Let's flip over to the other side of the coin and look at the bear case, because the challenges facing this company are, well, they're just as big as the opportunities. And for anyone investing from the US, this is the elephant in the room: geopolitics. You just can't ignore it. Whether it's the threat of new sanctions or security worries about that potential Apple deal, these US-China tensions hit the stock price directly. And it's not just us saying it. Even huge players like the Bridgewater hedge fund have been cutting back their stake, pointing right at this risk. So you see, Alibaba is really caught between a rock and a hard place here. On one side, you've got the US blocking access to the best chips, but on the other side, you have the Chinese government pushing them, saying, hey, you have to buy local. It puts them in this incredible squeeze and creates a ton of uncertainty for how they operate. And if you look at their latest earnings report, well, it was a really mixed bag. The headline number, net income, looked pretty good, right? But dig a little deeper and you see it was propped up by selling off some assets, a one-time thing. The really worrying part, revenue missed expectations and profits from their main e-commerce business plunged 21%. Why? Because of all that money they're spending.
And that's the real tension here. The critical thing to understand is that while Alibaba is pouring billions into building this amazing AI future, its main business, the one that's supposed to be paying for all of this, is in a dogfight. They're battling intense competition from rivals like PDD's Temu, and it's hammering their profit margins today.
So you've got the bull case, you've got the bear case. It's a lot to weigh. Let's step back and just look at the raw data. What are the numbers telling us right now? All right, here are the vitals for the stock as of late August 2025. Now, that year-to-date performance jumps out, right? Up over 44%. That's pretty great. But take a look at that 52-week range. The stock is still way off its highs, and that right there tells you everything you need to know about the volatility we've been talking about.
But even with all those risks we just laid out, Wall Street seems to be pretty bullish. The average analyst price target is sitting up there at over $152.
If they're right, that's a potential 27% jump from where the stock is today.
And it's not just the price targets either. Look at the ratings themselves. The vast majority of analysts covering Alibaba have it rated as a buy. It's a pretty strong consensus.
Okay, we've seen the strategy, we've walked through the risks, we've looked at the numbers, so what's the bottom line? How is an investor supposed to make sense of all this?
At the end of the day, it really boils down to this one major conflict. On one side, you've got this incredible potential, the AI chip innovation, that crazy cloud growth, the Apple partnership. But on the other side, you have these huge, unpredictable problems, the geopolitics and the brutal competition. And what that makes this, for a lot of investors, is something called an asymmetric bet. It's a classic case. The idea is simple. Yeah, the downside is real, the risks are high, the stock's going to be volatile, but the potential upside, if they can actually pull off this AI transformation, well, it could be so much bigger than the risk.
So really, the big question you have to ask yourself is this. Do you believe that Alibaba's internal innovation engine, all that brain power, fueled by those billions of dollars, is strong enough to power through the storm of outside risks? I mean, the geopolitics, the competition, all of it. Because that, right there, is the bet you're making.
If you found this helpful, please subscribe.